In an interview yesterday, Jerome Powell just admitted that the Fed broke the financial system and unleashed volatility onto the world. And we see the effects all around us. Traditional stores of value, like real estate, operate only in boom and bust cycles these days. GDP estimates can swing from negative to plus 4.6% in just one quarter. And this has created the opening for Bitcoin. Like Pascal Siakam taking over the Knicks, Bitcoin is the captain of TradFi now. Bitcoin adoption continues to grow globally, and it's on its way to becoming a $450 trillion asset. We got a lot of news to cover today. This is Dante Cook with Bitcoin Simply. Let's go. I won't bury the lead. Jerome Powell yesterday just dropped what we all know to be true. The Fed is the reason for the problems that the world is facing right now in finance. We are now at the end of the Bretton Woods era.
Had emerged from World War II as a global economic superpower. The Bretton Woods Agreement placed the U.S. and the Fed in a central position in the global economy. Our mission then, as it is now, was to serve the American people. But it was clear at that moment that the Fed needed to have better knowledge of global developments to achieve our dual mandate goals. A 1948 memo proposing to create the division stated, quoting, "Problems of international economics and finance have become increasingly large, complex, and significant in recent years, and our foreign economic relations will undoubtedly continue to give rise to issues of the first magnitude." That rare economic forecast that has turned out to be spot on. 75 years later, it remains critical that the Fed understand the policies and practices of other governments and central banks and their implications for the U.S. economy and for financial markets. Exchange rate policy, of course, is now firmly in the hands of the U.S. Treasury. However, the end of the Bretton Woods era in the 1970s fundamentally changed the conduct of monetary policy, as policymakers had to understand the effects of potentially more volatile movements of the U.S. dollar on American families and businesses. Understanding global trade and capital movements has only grown in importance since 1950, as we saw during the pandemic.
People are finally starting to wake up to why things in markets don't work anymore. I saw this article from Redfin. People are trying to sell $700 billion worth of homes right now. There's two main problems with this. Nobody wants to buy them, and nobody can afford them. Bitcoin is just a better store of value, and financial advisors are starting to wake up to this reality.
Well, we're seeing a lot of advisors have started that educational journey around what is Bitcoin and what is the role that it could play in portfolios. And I think what's really spurred this along is two things. One is their clients are asking them about Bitcoin, particularly millennial clients who have been digital asset native. And then secondly, in this environment where you have more global uncertainty, there's more interest in assets that behave differently from traditional assets like gold and like Bitcoin.
The average investor holds just 0.3% of their portfolio in Bitcoin. And I think that number has a long way to go. And it's not just for the individual investor. This is for the country. $120 billion asset manager Van Eck just came on and said that countries are starting to wake up to the realities of the global debt cabal that they've been subject to with the IMF, and are now mining Bitcoin as a source of freedom and a way to get out of their current financial struggles.
I think the biggest change is, again, the government shift. And let's move outside the U.S. The number of countries who are mining Bitcoin at the central government level, this was 2 countries in 2021. El Salvador became the 3rd. In 2024, we had 3 new countries join the club. All of them have debt deals with the IMF. So you start to scratch your head here, like, what do they have in common? They are tired of this never-ending cycle of debt that has been facilitated by the IMF, this extend and pretend where countries lose their sovereignty. So all 3 countries last year, Kenya, Ethiopia, Argentina, who are now mining Bitcoin, with government resources, they had IMF deals. Then look at the countries this year, Pakistan, another country with an IMF deal.
But this right here, this is a small press release, but this is one of the biggest signals and signposts that the world is moving towards a Bitcoin standard. The largest bank in Russia just launched one of the first global Bitcoin bonds. This will allow Russian investors to experience the upside price action of Bitcoin while also getting paid in dollars, which is a more valuable currency versus the ruble. It's a triple win. Announcements like this are subtle, but they communicate alpha and a lack of confidence that institutions and investors globally have in the normal TradFi system. Jordi Visser, in a great interview with Pomp, talks about the implications of Bitcoin bonds and what it could mean for other countries, the US government, and institutions globally. But before we get to that, let's thank our sponsors. One of the ways you can hold pristine collateral, like my friend CJK likes to say, and not sell for worthless fiat, is to unlock liquidity in your Bitcoin without selling your Bitcoin. And the leader in Bitcoin-backed loans since 2018 has been Ledn. They've issued over $9 billion worth of loans and counting to tens of thousands of customers globally. They do so in a fast, transparent, and simple manner. If you want a $5,000 loan, well, you post $10,000 worth of Bitcoin collateral and make sure that your loan to value continues to be within a range that they communicate easily and simply in their dashboard. You can get your account funded in less than 24 hours. Actually, it's 18 hours on average, which is why they have over 1,000 five-star customer reviews. If you don't trust them, well, they do a digital proof of reserves. In fact, they were the first digital lender to do so. Loans start at just 12.5%, but you can get 0.25% off your first loan by going to learn.ledn.io/simply today. The end of the Bretton Woods era signaled that not only do you not have control over the assets that you own, well, they can get printed at infinitum with no accountability. One of the ways that you can have accountability over your own assets is by removing them from third-party exchanges. Bitcoin is the only asset that operates outside of the traditional financial system that can also integrate back into the financial system when you need it. One of the best ways to exercise your authority and your ability to control your money is by removing it from third-party exchanges. Well, you can do that now with confidence by getting a coach at the Bitcoin Way. Schedule a free 30-minute consultation with their team at thebitcoinway.com/simplybitcoin. Protect your generational wealth the right way.
All right, Jordi, I thought a great place to start this conversation is the idea of a bit bond. This bond concept with Bitcoin backing it. We now have the mayor of New York City saying he is going to use this. So this is no longer theory. It's no longer kind of academic, pontificating. We now are saying there's a city who's going to use a bit bond. What is a bit bond? And do you think these are a good idea?
Well, first of all, I think they're a great idea. And that's not just from someone who believes in Bitcoin. We have the merging of two systems. And so, we've talked extensively, not only about what's going on, but I kind of look at the world right now as the old fiat economy that's very industrialized, the digital economy, which has been growing rapidly, doesn't need debt, and then the payment side and using this new capital structure of the new system. So I've always viewed since the day that I kind of embraced Bitcoin as not a currency in any way, shape, or form for me, but really as kind of the idea of a new capital structure. And because you have these separate economies, you have an enormous amount of capital that people want attached to Bitcoin. Michael Saylor's obviously done this extensively. So why shouldn't governments be doing it? As someone who grew up in the financial markets, you're trying to issue structures, whether they're bonds, whether they're equities, whether it doesn't really matter, towards where the demand is. So we've talked about how it's been very difficult for people to sell private equity. There's been IPOs are just not coming through. M&A is still slow. But yet anyone that raises money for anything related to crypto oversubscribed. And that's where the demand is. And so the great thing about capital markets is you start migrating towards where the demand is. Now, the great thing about the bond is on the one side, New York and the whole country has a problem. They need to fund at lower interest rates to be able to deal with the budget problems. And if people are willing to take a lower coupon and get participation in Bitcoin as a way to get higher returns and at the same point are guaranteed their principal, there's going to be demand for that at this point because Bitcoin has such a great track record. And that's the part. I don't know. Did you go to the Bitcoin conference? You did.
I did not.
You did not. Okay. So one of my favorite lines, I saw Matt Siegel, who I've known for a long time because he's another TradFi person that went into this route. He wrote about Bitcoin is the hurdle rate for innovation. That's kind of what bit bonds are. At the end of the day, you're incorporating the hurdle rate, which in this case, the Bitcoin returns. It doesn't mean in the future we won't have the returns, but when you're using any kind of structure, you're looking for demand and people going, I want to get involved. But you know what? I kind of want to get involved in
in Bitcoin, but I want to have my principal protected. So give me the chance of making 15%, but protect my principal. So I think this is step one of eventually the United States government figuring a way to do this and tapping the demand that's out there.
The New York, the United States government, they all have a problem. There's almost no equity left in all of the existing capital structures. Meaning, where is the additional growth going to come from, other than more printed money? Manipulation of the money creates boom and bust cycles. And the only people that are really benefiting from this are people that already have assets or people who are traders, who are scalpers. And this is rooting out the middle class. People who want to just work hard, save their money, and invest so that their kids and future generations can have a better life than they did. And the only asset class that's making this possible, not just for US investors in the middle class, but for people globally, is Bitcoin. And that's why people like Jack Mallers believe that Bitcoin is going to a $450 trillion asset class.
$900 trillion roundabout is the worth of stuff that humans own. Equities, currencies, sovereign debt, real estate, art, metals, collectibles, 900 trillion. About half of that we've monetized. So you own the art, not to put it on your wall and consume so that your toddler can throw spaghetti on it and ruin your fancy Van Gogh piece, but you're owning it because you're trying to store value. You own the real estate, not because you're living in it, because you're trying to store value. You own the index of portfolio stocks, not because you believe in leadership, you understand the products, you believe in earnings per share growth, but because you're trying to store value. So that's about $400 to $500 trillion of savings that humanity, there's a problem there. This capital is leaking. It's looking for a new home. And so the way we view ourselves is offering a transition into what we believe is the answer, which is Bitcoin, and giving fixed income, giving the equities market's worth $150 trillion. By the way, in Apple and Amazon, these companies are worth 1, 2, 3, 4 trillion. $150 trillion globally. There's a big appetite for a new home through this regime change. And so I think we're solving a noble problem for lots of people. I mean, what do you say to the no-coiner that has all their savings in a 401k? Well, how about making sure that there's some Bitcoin exposure in there? Is that a good, noble deed to do? I think so. And who are you to say that they're not allowed to? So anyway, that's my opinion on that. I think Wall Street has access to Bitcoin, just like the guy I met at the meetups 13 years ago.
Betting against Bitcoin now is like betting against the internet in 2000. It's a mature asset class with 16 years of history, yet it's still misunderstood, it's still too risky, and still complex for the average investor. But that doesn't mean that the people who just took a little bit of risk, who had a little bit of conviction, who watched shows like these, liked and subscribed to channels like these, understood the value that the internet or Bitcoin is going to have in the future financial system. I hope you continue to get more and more confidence every day, and don't overcomplicate the trade. One of the ways that you can continue to grow in your Bitcoin journey is by meeting Bitcoiners that you watch on shows like this in real life. And one of the ways you can do that is by learning about Bitcoin mining at the largest Bitcoin mining expo in the world, Mining Disrupt #2 in 2025, which is happening in Dallas, Texas from November 11th through November 13th. Use the promo code SimplyBitcoin for 20% off. It was amazing getting to meet a lot of you down at Mining Disrupt earlier this year, and we can't wait to meet you again. This is Dante Cook with Bitcoin Simply. Happy stacking.